Hey, loan officers and realtors, this is really simple. Get trained on NonQM. You need to understand these products. If you want to learn more about it from my good friends over at Oaktree, all you have to do is click this banner right over there. All right, so the Silicon Valley Bank, yikes. You guys already know the story. It's FDIC insured, which means $250,000 is backed by us, the taxpayers, until yesterday when the president said, we'll just back absolutely everything. But here's the problem. It's the Silicon Valley where every startup exists. Apple, Twitter, Uber, Yelp, I mean, all of them. And I want you to think about this, guys. The median value on a house in the Silicon Valley right now is $1.18 million. The bank crashed. Wrap your mind around this. $250,000 insured, FDIC. 93% of all of their deposits at this bank right now are over $250,000, which means, sure, the bank failed, but the bigger question is, how many tech startups lost their butt? The number, my friends, is overwhelming.
But the bigger story here is not Silicon Valley Bank. Rather, it's all the banks who are part of this house of cards. Here's a graph of the 4 largest banks and their current unrealized losses. Notice anything? These numbers are screaming at a systematic failure. But let's talk about Silicon Valley and the consequences to some of these companies.
My friends, this is the largest bank failure since 2008, which is kind of making me nostalgic for some of the last major crashes. The biggest crash since Flo Rida sang Low and Iron Man was the top movie of the year.
Roku, the maker of the streaming media player, said in a U.S. Securities and Exchange Commission filing on Friday that roughly $487 million, or 26% of its $1.9 billion in cash, was tied up with Silicon Valley Bank. Its deposits were largely uninsured.
iRhythm Technologies, which sells a wearable device that monitors cardiac patterns, it said in a filing on Monday, about 1/4 of its $213 million in cash holdings were in operating accounts held at the Silicon Valley Bank. It also has 35 million term loans outstanding with Silicon Valley Bank. The company added that it had $134 million left.
Roblox, the gaming company, said in a filing that about 5% of its $3 billion in cash and securities balances were held at the bank, but it added that it would not affect its daily operations. Vox Media, the publisher of New York Magazine and The Verge, has a substantial concentration of cash at Silicon Valley Bank and used credit cards that were issued by the bank. Those credit cards ceased to work on Friday.
Circle, a blockchain Spain payment company, wrote on Twitter on Saturday that $3.3 billion of its USD coin cryptocurrency was still held by the Silicon Valley Bank, and it was one of 6 banks the company used to manage roughly 1/4 of its USD reserves that it held in cash.
Now here's the bigger issue. We've had 3 banks fail in the last couple of weeks. Signature Bank, one of the 2 big U.S. destinations for crypto companies, has been closed by New York regulators. Quote, all depositors of this institution will be made whole. The Treasury, Federal Reserve, and Federal Deposit Insurance Corporation said in a joint statement. This is the 3rd major bank that has fallen in a space of just a week, and investors are spooked.
Now, the joint announcement that depositors will be protected above the $250,000 guaranteed by the FDIC appears to be meant to reassure banking customers that their money will not be frozen. Signature has $88.59 billion in deposits as of December 31st, 2022. The New York Department of Financial Services has taken possession of the bank. Crazy, isn't it? In short, my friends, bring back the implodometer, because this is simply the beginning of what we're going to see over the next couple of weeks with banks. Sorry about this, but I hope it helps.